And about 24 hours after the presentation of the 16.4 trillion naira budget by the president, the Minister of Finance gave the breakdown of the budget as well as the performance of the 2021 budget till the end of August. Now we'll review some of the figures which the minister presented with Mr. Ayodeji Ebo, the head retail investment in Chapel Hill. Denham, good morning and good to have you, Mr. Ebo.
Good morning. Thanks for having me.
So let's start with the FGN share of oil revenues, which was 754.2 billion naira, representing 56.3% performance on the prorogated sum in the 2021 budget, while non-oil tax revenues totaled 1.15 trillion naira. That's over 100% above the target. Now, how do we explain this? What's the meaning of this? What impact have we seen from this, saying that this is till the end of August and we're already in October?
Okay, thanks. And very interesting, at least, to have the performance, which to me would also be what we should tell us what we should expect for the rest of the year, and also performance in 2022. So looking specifically around the revenue, so you will discover that the oil revenue underperformed by almost 43%, and that can largely be attributed to the OPEC plus quota. When you check Nigeria's oil production, excluding condensates, average around 1.3 million barrels per day production. So, but luckily, at least oil prices was up, and within that period would average around $65 to $70 per barrel. So, despite that, it still underperformed because of the cut in production. Then, speaking to the non-oil revenue, which surpassed the target when you prorate it based on the full year numbers, that surpassed I think by about 20%. So I tried to narrow that down to the company income tax and the value-added tax. Starting with the value-added tax, we recall that last year, based on the 2020 Finance Act, VAT was increased from 5% to 7.5%. But due to the COVID impact, Nigeria did not enjoy, or the government did not enjoy that benefit of the increase. But with this year, where we've seen that business activity have opened up, that really impacted positively on the revenue from the VAT. And for company income tax, that's the CIT, we can also note that with the opening up of the economy, business activity picking up, we can see that even from the earnings of the quoted companies that we can easily see their results. So by and large, I think it's on the non-oil sector part, yes, it's positive. But when you look at the total revenue, still lagging behind the projection. And if you try to correct that and you want to annualize that for the end of the year, the revenue will stand around maybe 5.9 trillion naira, which is significantly lower than the projected of about 8 trillion naira, which would definitely increase the expected budget deficit for the year.
Okay, so while we still look at, like you said, the end of the year, we may not have hit our target, but we see like you mentioned, the increase in value-added tax and the CIT, company income tax. Are these supposed to be impactful? Are we supposed to feel the impact in the economy? Are Nigerians supposed to feel the impact?
I think, ironically, the impact is Nigerians are giving out. So when you look at VAT based on the purchases that have been done, so it means that Nigerians are paying, or there's been demand for goods and services, and as a result, VAT has increased. But where we're supposed to see the impact is that if we can improve on the collection rates, and when we're able to also channel it to more productive sector. You know, where the major challenge is now is that even with the increase in CIT and VAT, we're still lagging behind in terms of revenue. 3.9 trillion naira as at August compared to 5.4 that we should have brought in. So that will lead to significant rationing of the expenses, and as a result, it's really going to really impact negatively. Most times, we know the major part of the expenditure, which is capital expenditure, that suffers the most. So I would say that what these figures, I think, speaks to us about is that, yes, activities have increased in the past few months, and as a result of that, government is able to make more money from businesses. And this should be a major signal to even the federal government that if government can provide more conducive environment, more support for businesses, it means that can double, CIT can double, because as businesses do well, as Nigerians buy more, government will also be able to get more tax.
All right, let's look at the expenditure side now. Records show that the expenditure was 8.14 trillion naira. That's 84% of what was supposed to have been spent out of 9.71 trillion naira. Now, 1.759 trillion naira have been expended on the capital expenses, indicating an underperformance. And we know that this is where we're supposed to have more focus if we want to accelerate recovery and growth in the economy. And it will also be good to connect this to the borrowings, because every time the government borrows, they connect it to infrastructural development. So how do we connect this now? Would we say that by the end of the year, since this is end of August, with the more borrowings we have done, we would see more growth or more input into the capital expenditure?
Okay, thanks. You asked a very interesting question. This part of the expenditure, capital expenditure, is what affects more Nigerians. But sadly, when you look at the performance, like you rightly said, underperformed by about 47%. And what has been released so far is about 1.75 trillion compared to about 4.9 trillion that has been budgeted for. So you would agree that if we want to grow as an economy, this is the major area where spending should increase. So when you look at the major line item for expenditure, capital expenditure carried the list. The target was around 29% of total expenditure, but currently it stands at about 20% of total expenditure. So it means that Nigerians are not really benefiting from the total spending. And if you try to juxtapose that with the borrowing, so borrowing so far, as stated in the report, is about 2.9 trillion naira. And out of that, about 807 from Ways and Means, which is the support from the CBN. When you look at the capital expenditure as a proportion of the borrowing, so you can see that rather than look at it as a proportion, I would say rather than look at it as a proportion of the borrowings. So you want to see what the actual revenue is. So actual revenue at 3.9 trillion so far, and government has spent 8.1 trillion naira as at August. You can see the gap. So it means that most of the funding that's being raised is being used for other non-capital related expenditure, and which is responsible for the low performance within that space. So I feel that for us to be able to grow, like you rightly mentioned, and for us to accelerate our growth rates, there needs to be more dedicated spending to capital expenditure. Yes, if you look at the 2020 proposed budget, I think about 1.7 trillion has been linked to multilateral borrowings that have been tied to projects. So that can easily be traced, and as long as government is able to access that funding, it means that those projects will be executed. So I feel, yes, there's revenue constraints, but we need to see how we want to cut down on the expenditure to increase, cut down on non-capital related expenditure so that we can have more. And I would say what government can also do is to see how they want to phase out the subsidy angle, which I know it's very unpopular, but it can be structured so that the gradual phasing there can be a paper that is structured that whatever is saved will be moved to capital expenditure. And if Nigeria can see that this year we saved 2 trillion from subsidy, and we can link it to the capital, to the spending in projects, then there will be more confidence to allow government to phase it out as we progress. But you can't just decide to take out subsidy without putting a plan to alleviate or reduce the impact on Nigerians.
Well, you can say that again, Mr. Ibo, because, I mean, even when you talk about, you know, the issue of debt servicing and borrowings, the debt stock has also been a major discussion. And so the government keep connecting it to infrastructure. And people are asking, okay, so where are these infrastructure? So this is an ongoing conversation, because another issue, of course, is the debt servicing of the expenditure. 2.87 trillion naira was for debt servicing and 2.57 trillion naira for personnel, including pension. So let's say, is it a source of worry? The Minister of Finance has over time told us we are in a safe place. Should we be worried from your perspective?
I think the numbers can speak for themselves. So if we look at what the federal government most times always focus more is the ratio of our debt to GDP. But we can tell ourselves the truth. Is our GDP, we want to tell ourselves the truth, is our GDP productive? What are we able to extract? The GDP is like the asset for a company. Are we able to sweat these assets to increase our income? The answer is no. So the best way to always look at it is look at it as a proportion of your actual revenue, so that it gives you an idea of your ability to pay back. In corporate world, you would say you are looking at your interest coverage, you are looking at how your income can pay back your interest. But when you look at it based on actual revenue, it's around 74%. It means that out of every 1 naira that we generate, 74 kobo is used to service the service debt. That's assuming that we don't get any other revenue for other purposes. So it means that it calls for concern. And what another implication I think this would also have is the more we continue to borrow, the more it reduces the effectiveness of even our budget, because the capital expenditure angle of the budget or segment of the budget continue to suffer, because we will always need to first service our debt. We don't want to default on it so that we don't have bigger problems at our hands. And as a result, there will be little or nothing left for capital expenditure. It's interesting that the infra has been set up would also help improve reduce our infrastructure deficit this year once it kicks off. But I think we need to also always consider, beyond looking at it as a proportion of our GDP that is not very productive, then we need to focus on what the actual numbers is saying. You work from the actual numbers. Look at past performances in the past 3-4 years. If there's nothing that you have put in place that you are very sure that would double that revenue, then I think that in terms of borrowings, yes, we will need to look for other means that we can use to raise borrowings, or even the little resources we should be used as counter funding, so that we can increase the multiplier effect of the little resources that we have.
Well, a very worrying cycle there, Mr. Ibo, because the government has said we need to borrow at least to even fund the budget. And then, like you noted, more borrowings reduces the effectiveness of the budget. And with that means we have less capital development or expenditure, which of course means less infrastructure, which could affect the economy. So we do hope that we'll get out of this cycle in the nearest future. Thank you so much, Mr. Ayodije, for joining us this morning. Head Retail Investment, Chapel Hill. Then enjoy the rest of your day.
And you too. Thank you for having me.